Hi, and welcome to the Stockscores Market Minutes for September 19th, 2014. This week, I'm going to talk about the importance of alpha and how just a little increase in the return that you get on your portfolio can affect retirement. Now, let's use a couple of examples. If you put $100,000 and earn 8%, which is what the market roughly historically earns, over the next 20 years, in 20 years, it will be worth $466,000. We can go into my little Excel spreadsheet here and see that. Now, if we make just a 1% change to that, in other words, we say instead of earning 8%, you earn 9%, well, that $466,000 now grows to $560,000. So you can see that just doing a little better than the market's historical return has a pretty significant effect on how much money you have after 20 years. Now, grow that 8% by 50%, and you find that now your $466,000 is actually $964,000. It has more than doubled. A 50% increase in the return that you get in the market doubles your amount of cash after 20 years. So the point of all this is that if you want to really see some improvement, you have to make small incremental changes to the return that you earn in your portfolio. Now, to do that, you have to do better than the market. In order to do better than the market, you must find alpha stocks. These are stocks that are trading on their own story, that don't move with the correlation to the market. As an example, in the last year, Alcoa has been a real strong alpha stock because it made a much stronger return than the overall market has. Now, last week, in the last week's video, I talked about the importance of abnormal behavior, and that's really the key to finding alpha stocks. When you want to find alpha, you have to start out by looking for stocks that are trading abnormally, stocks that were trading just like the market was, and then start to trade with more volume and a bigger price change. Those are stocks that are being driven by significant changes in their fundamentals, and that is what allows those stocks to buck the overall trend of the market and perhaps take you from that 8% annual return on average to perhaps that 12%, which can double your overall retirement savings. All right, let's get into this week's analysis. Here is the chart of the S&P 500. We look at this every week. This week I wanted to highlight, however, that the tops are not rising as quickly as the bottoms. Not a big deal, but if we see that green upward trend line broken, it turns into a little bit more of a big deal. Right now, still in a bull trend, but I want to be a little bit cautious because I do see the pace of that trend not as fast as it has been. The TSX has a little bit more of a concern for me because this past week was a pretty strong selling week on the TSX. Now, that's largely because of strength in the US dollar, which has hurt commodity stocks, and of course, the Canadian market is dominated by commodity stocks. And you can see on the chart that we have broken the upward trend line. Now, 1 week below the upward trend line doesn't make me say that the sky is falling, but certainly it is a concern, and I want everyone to keep a close eye on this because it does look like the Canadian market may go into a bit of a pullback here. Keep in mind that the Canadian market has been one of the top performing markets in the world this year, and so it is perhaps due for a little bit of a pullback. The TSX Venture broke its upward trend line, not really a strong upward trend line. You can see that rising bottom line that I have, the one that rises from left to right. It wasn't significant. It was really just a sign that the market had stabilized after a lengthy downward trend. But in the past week, and again with weakness in commodity prices, you see that money is again leaving the TSX Venture stocks. And I expect now that we will see the TSX Venture move down toward the 900 mark, that horizontal green line. The U.S. Treasuries bounced back this week. It had pulled back to that upward trend line. We talked about that last week and how because it had fallen into that break of the upward trend line that it was likely to bounce. And in fact, this week it did bounce back. I still think there is some potential for this upward trend to be broken and something that we definitely want to watch for. But right now, we still are in a bull market in U.S. Treasuries. The U.S. dollar continues to be strong. I've talked about that already this week and the fact that it's really having a weight on the commodity prices, and I think that we could still see another week or two of strong strength in the US dollar as it moves back up toward that red line of resistance. Now, it is pretty overbought. There will come a time when there will be profit taking in the US dollar and you'll get a pullback, but for now, really no sign of weakness. Gold market has broken through that upward trend line, and that really, that line rising from left to right here was the one that goes all the way back 10 years. So that was a real important breakdown last week, and we've continued to see weakness. My expectation is we go down to that 115 on the GLD and probably get some support there. Hopefully that will coincide with a sort of retracement in the US dollar, which has shown that considerable strength. Oil market is still holding its upward trend line, barely hanging on. It is fighting against that strong US dollar. So thus far, the oil bulls are keeping it in line. But if we get a couple weeks of consolidation and then a breakdown through the green line, we break down through here, we're headed for lower prices on oil. And the VIX has pulled back to support. It showed a little bit of a sign that some people are looking for protection in the options market. We saw that on Friday, and that could coincide with what I think might be a little bit of a pullback this week, but certainly no significant fear in the market. In fact, I would say the market is complacent. So US stocks remain bullish, a little bit of caution there, but we've been saying that for months. It just continues to move higher. Canadian stocks, I'm lowering my rating to neutral because I don't like that break of the upward trend line. I don't think you have to run wholeheartedly out of Canadian stocks, but certainly take notice of some of your high-flying stocks. They may be giving you signals to take profit. On the gold market, remains bearish, just the same as last week, and I expect that we will continue to see it move lower. On oil, bearish in the short term, but it is at that upward trend line where it should hold, so I'm going to keep my rating at neutral for the long term. U.S. stocks remain in a low volatility, low volume upward trend, kind of typical for this time of year, and I'm expecting that that will change as we go into October, November. Canadian stocks have broken their upward trend line this week, and they look like they could pull back further. Gold is weak, but it is nearing some support. Oil is at support where it is trying to bounce, and the strong U.S. dollar is really what is driving these commodities lower. There is some upside for it still, perhaps another week or two of upside for the US dollar before it hits resistance. In general, I think it's a complacent, boring market, and I'm really looking forward to the end of the slow season for trading, which typically ends sometime between now and the end of October. Could be next week, could be in 5 weeks. Well, that has been this week's Market Minutes. I hope that you all have a great week in the market and trade well.